You are losing money right now. Not because the market crashed, not because you picked the wrong stock. Because of something happening inside your brain that nobody ever warned you about. And the worst part is, most people go their entire lives never realizing it. They work hard, they save, they invest, and they still end up with a fraction of what they should have. Today that changes. Let me paint you a picture. Imagine you finally did it. You opened that investment account. You put in money you worked incredibly hard to earn. You felt proud of yourself, responsible, like you were finally doing what the successful people do. And then the market dipped. Maybe it dropped 5%, maybe 10%, and something happened inside you that you could not control. Your chest got tight. Your eyes went to that number on the screen, your stomach dropped, and without even fully thinking it through, you pulled out. You told yourself you would get back in at the right time, but you never did. Or if you did, you got back in right at the peak, because that is when it finally felt safe again. Does that sound familiar? Because that is not a you problem. That is a human problem, and it is costing people fortunes. Here is what nobody tells you when they hand you a brokerage account and wish you good luck. The single biggest threat to your financial future is not inflation, it is not interest rates, it is not even a recession, it is your own emotions. And that might sound simple, it might even sound insulting at first, but stay with me, because the data behind this is absolutely staggering. Studies from some of the most respected financial research institutions in the world have consistently shown that the average investor earns dramatically less than the actual market returns. We are talking about scenarios where the market produces strong gains over a decade, and the average person captures maybe half of that, sometimes less. And the reason is almost always the same. They bought high because it felt exciting and they sold low because it felt terrifying. They let their emotions make decisions that their logic should have been making. That gap between what the market gives and what you actually keep, that is called the behavior gap. And for most people, that gap represents tens of thousands, sometimes hundreds of thousands of dollars left on the table. Now, here is where it gets really personal. Think about what that money actually means. That is not just a number. That is the vacation you never took, the house you could not quite afford, the retirement that keeps getting pushed further and further away, the stress you carry every single month wondering if you are ever going to get ahead. That money existed. It was supposed to be yours. And emotion took it. Before we go deeper, I wanted to be direct with you. We have a program linked in the video description below. If you are someone who is serious about breaking this cycle and building the kind of wealth you actually deserve, I want you to look at it. Not everyone is ready for it. Honestly, if you are still skeptical that emotions are affecting your investing, this probably is not for you yet. But if some part of you already recognized yourself in what I just described, that recognition is important. It means you are ready to do something about it. Check it out. It will not be there forever. Now let me go even deeper, because I want you to truly understand what is happening in your brain when you make emotional investing decisions. This is not weakness. This is biology. Your brain has a part called the amygdala, and its entire job is to protect you from threats. When your ancestors were running from predators, this part of the brain saved their lives by triggering immediate action. Freeze, run, or fight. Now fast forward to today, and your brain does not distinguish between a lion chasing you and a red number on your investment screen. It treats both the same. It floods your body with cortisol and adrenaline and screams at you to do something right now. And in that moment, rational thinking shuts down. You are not analyzing, you are reacting. And reactions in investing almost always cost you money. This is why the smartest people you know, the ones who are brilliant at their jobs, who are great at problem solving, who read books and listen to podcasts and try to do everything right, they still make emotional investing mistakes. Because this is not about intelligence. It is about understanding, a system inside you that was never designed for financial markets. Let me show you what this actually costs over time, because the numbers will make your jaw drop. Picture this. Two people start investing at the same time with the same amount of money in the exact same market. One of them stays calm. They have a system. They ignore the noise. They do not react to every market movement. They just stay consistent. The other person is emotional. They jump in and out. They time things wrong. They miss the best days in the market. Research consistently shows that missing just the 10 best trading days over a long investing period can cut your total returns by more than half. The market does most of its recovery in very short bursts, and emotional investors almost always miss those bursts because they sold right before them. After 20 or 30 years, the difference between those two people is not 10% more or 20% more. It can be the difference between financial freedom and financial struggle. Same market, same starting point, different emotional discipline. And here is the cruel irony that almost nobody talks about. The times that feel the most dangerous in the market are often the best buying opportunities. And the times that feel the most exciting are often the most dangerous. When everyone is panicking and selling, the calm investor is quietly buying assets on sale. When everyone is celebrating and throwing money in because prices are soaring and it feels amazing, the calm investor is being cautious. The emotional investor has it completely backwards, and they do not even know it because it feels right in the moment. Let me tell you about the two most powerful emotional forces destroying wealth: fear and greed. And before you say you are not greedy, let me reframe that. Greed in investing is not wanting too much. It is chasing performance. It is seeing something go up and throwing money at it because your brain says, I cannot miss this. It is the feeling of watching something skyrocket and feeling left out. That feeling has a name in psychology. It is called FOMO, fear of missing out, and it causes people to buy at the worst possible moments. Then there is regular fear. The market drops and everything in your body tells you this is going to zero, get out now. And even when your logical mind knows that markets recover, even when you have read the statistics, even when someone has told you to just hold on, the fear is louder, so you sell, and then it recovers. And you feel like an idiot. And that feeling, that shame spiral after a bad decision, that is actually what causes the next bad decision. Because now you are emotionally burned. You are hesitant. You overcorrect. You become too conservative. And then when the next opportunity comes, you do not move. You watch from the sidelines. And the cycle continues. But what if it did not have to be this way? What if there was a version of you that understood exactly what your emotions were doing in real time? A version of you that had a framework, a set of rules you created for yourself in a calm state, that you follow automatically when things get turbulent? What would that version of your financial life look like? Think about what calm, consistent, emotionally intelligent investing actually produces. People who master this do not just make more money, they sleep better at night. They stop checking their portfolio every hour. They stop feeling sick when the news talks about the market. They feel genuinely in control for maybe the first time in their adult financial lives. And that peace of mind compounds just like interest does. Because when you are not in a constant state of financial anxiety, you make better decisions in every other area of your life too. Your work, your relationships, your health. Financial stress bleeds into everything, and removing it changes everything. The people who have figured this out, the ones who have built real generational wealth, they all say the same things when you really listen to them. They talk about having a plan and trusting the plan. They talk about separating their emotions from their decisions. They talk about systems. They talk about not watching the news every day and just staying the course. These are not complicated ideas, but they require something that most financial education never actually gives you. They require the emotional and psychological rewiring to actually execute them when it matters most, when everything in your body is screaming at you to do the wrong thing. The cost of not solving this is not just financial. It is years of your life spent stressed, anxious, second-guessing every decision, watching other people build wealth and wondering what they know that you do not. Meanwhile, the gap keeps growing. Every year you let emotions drive your investing is another year of compounding working against you instead of for you. And here is the brutal math of that. The money you lose to emotional decisions early in your investing journey does not just disappear. It loses all the future growth it would have generated. A mistake that costs you $10,000 today might actually cost you $50,000 or $100,000 over the next 20 years when you factor in what that money would have compounded into. This is why I am so passionate about this conversation. Because the solution is not more stock tips. It is not a better app. It is the internal work that changes how you relate to money and markets at a fundamental level. And if you want to go deeper on this, if you want an actual structured way to close your own behavior gap and start building the wealth that has been available to you all along but that emotion has been stealing, the program in the video description below is where that happens. Most people will watch this video and nod and then go back to making the same decisions they always have. That is human nature too, but you already know that is not who you want to be. That is why you are still here. The link is below. The decision is yours. And the longer you wait, the more that gap costs you,